We'll get started. We're going to be discussing the VA Home Loan Guarantee that is offered by the Department of Veteran Affairs. The VA Home Loan Guarantee is a benefit offered by the Department of Veteran Affairs. Through this program, the VA will reimburse a lender, such as a bank, credit union, or mortgage company, in the event of loss due to foreclosure. This guarantee takes the place of your down payment. So the VA Home Loan Guarantee has 3 key benefits. You aren't required to put any money down. In certain situations, you might have to put some money down, but that is one of the key benefits. There's no primary mortgage insurance requirement, and you might be exempt from some closing costs. So here are the eligibility requirements for service members or veterans. You have to have completed at least 90 days of active duty service. You have to have at least 6 years of service if you were in the reserves or the National Guard. You have to have served at least 181 days of active duty service during peacetime. You have 30 or 90 days of cumulative service under Title 10 or Title 32. For Title 32 service, at least 30 of those days must have been consecutive, or you're the spouse of a military service member who died in the line of duty or as a result of a service-related disability. There is a video that we will be watching at the end of the presentation that I feel more so clarifies some of these eligibility requirements. So these are the eligibility requirements for surviving spouses. So you may be able to get what's called a certificate of eligibility if you're the spouse or widow of a veteran and at least one of these is true. The veteran is missing in action, or the veteran is a prisoner of war, or the veteran died while in service or from a service-connected disability and you did not remarry, or the veteran died while in service from a service-connected disability and you didn't remarry before you were 57 years old or before December 16th, 2003, or the veteran had been totally disabled and then died, but their disability may not have been the cause of death. So these 2 images go over the service requirements. Again, we'll be watching a video that will go more in depth of this. So there are some exceptions to the minimum service requirements. Service members discharged prior to meeting minimum service requirements may still be able to get a VA guaranteed home loan if they were discharged for one of the reasons listed below. Hardship, convenience of the government. For that one, you must have had served at least 20 months of a 2-year enlistment. Early out. For this one, you must have served 21 months of a 2-year enlistment. Reduction in force, certain medical conditions, or a service-connected disability. The image below goes over eligibility for those with a less than honorable character of service. Those would be other than honorable, bad conduct, or dishonorable discharges. One of these discharge statuses may disqualify a veteran from receiving VA benefits, including the VA home loan benefit. If the Department of Defense or the Coast Guard determined you served honorably in one period of service, you may use that honorable characterization to establish eligibility for VA benefits, even if you later received a less than honorable discharge. You can apply for a discharge upgrade or correction, even if your previous upgrade application was denied. For example, you may have additional evidence that wasn't available to you when you last applied, or the Department of Defense may have issued new rules regarding discharges. There's a note. The Department of Defense rules changed for discharges related to post-traumatic stress disorder, traumatic brain injuries, and mental health in 2014, military sexual harassment and assault in 2017, and sexual orientation in 2011. I don't have information on this PowerPoint, but I do believe they are now doing discharge upgrades if you were discharged for not taking the COVID vaccine. I can gather more information if there's anyone who is inquiring about that. Documents required for a VA loan. So from the lender, they will need your certificate of eligibility, your loan application, your credit report or credit score, 2 years minimum of proof of income, and documentation of any outstanding debts. The VA will need your certificate of eligibility, your VA service-connected disability award letter, if not noted on your certificate of eligibility. This is to verify that you may be exempt from the VA funding fee. And the VA will also need a condo form if applying for a condo. Here is how to request your certificate of eligibility. Your lender may be able to use an online system in order to get your certificate of eligibility. The system is called WebLGY. In my experience, majority of lenders do have the opportunity to access WebLGY in order to get your certificate of eligibility. You can request one by mail using VA Form 26-1880, or if you have a va.gov account, you can also request one on there. So the next few slides will go over VA home loan entitlement. You can reuse your VA home loan benefit to buy or refinance another home after your first use. The size of loan and potential down payment amount will depend on whether you plan to have just one or more than one outstanding loan at a time. You can request a restoration of entitlement for subsequent use on another home loan by visiting va.gov or downloading VA Form 26-1880. This is going to go over how to restore your VA entitlement. As a previous borrower, you can apply to restore your previously used VA entitlement if at least one of the following is true. The home you bought with a prior VA loan has been sold and the loan repaid in full, or another qualified veteran agrees to assume or take over the payment on your loan and substitutes their own VA entitlement for the original loan amount, or you've repaid your prior loan in full but haven't sold the home you bought with that loan. That is a one-time option. Or you can apply to VA to have your full entitlement restored. With that, you can purchase a new home and VA will back any loan amount and with no down payment requirement. As of January 1st, 2020, first-time homebuyers or homebuyers who have sold their home and have full benefit entitlement available will no longer have to worry about loan limits or down payment requirements when purchasing, refinancing, or constructing a new home. If you use your VA home loan benefit and want to buy another home without selling your previous home, you will not have full entitlement, but you may have partial entitlement. This means that you can still purchase a home at any loan amount, but the VA can only guarantee the loan amount covered by your remaining entitlement, if any. To determine your remaining entitlement, the first step would be to request an updated certificate of eligibility to see how much entitlement you have already used. The second step is going to be calculating 25% of the FHFA conforming loan limit under the one unit column for the county where you want to purchase your next home. If this amount is higher than your used entitlement, the difference is your remaining entitlement. So for McHenry County, the 1 unit limit conforming loan limit would be $806,500. And then we'll go over how to calculate that again. So just to reiterate, the first step would be ordering your check or your VA certificate of eligibility. Then you determine the FHFA conforming loan limit for McHenry County. So for 2025, the single family 1 unit conforming loan limit in McHenry County is $806,500. The next step is to calculate 25% of that number. So 25% of 806,500 is 201,625. And then you multiply, so that number would be your remaining entitlement. 25% of the conforming limit, you would subtract the entitlement that you used already. So the next slide is going to have a table that goes over that. The 806,500 is the conforming loan limit for McHenry County. And then the VA entitlement is 25% of that conforming loan limit, 201,625. And as an example, the entitlement that was already used is $80,000. So your remaining entitlement that you would be able to use to purchase a second VA home loan would be $121,625. I know that was somewhat confusing. Are there any questions so far with that? Okay, we'll move on. Costs associated with a VA home loan. One-time expenses, the VA funding fee, appraisal, closing costs, down payment, discount points, earnest money deposit, home inspection, lender's title insurance, and owner's title insurance. And then recurring expenses would be mortgage payments, homeowner's insurance, utilities and maintenance, and any homeowners or condominium association fees. So what is the VA funding fee? The VA funding fee is a one-time payment that the veteran, service member, or survivor pays on a VA-backed or VA direct home loan. This fee helps to lower the cost of the loan for U.S. taxpayers since the VA home loan program doesn't require down payments or monthly mortgage insurance. The following do not have to pay the VA funding fee. A veteran who is receiving VA compensation for a service-connected disability. A veteran entitled to receive VA compensation for a service-connected disability, but receives military retirement pay in lieu of compensation or active duty pay. Surviving spouse of one who died in service from a service-connected cause or totally disabled and is receiving dependency and indemnity compensation. Service member with a proposed or memorandum rating from VA prior to loan closing, as eligible to receive compensation because of a pre-discharge claim. Service member on active duty who provides on or before the date of loan closing evidence of having been awarded the Purple Heart. This is a funding fee table. For all borrowers, Congress has established the funding fee rates for loans closed on or after January 1st, 2020 at the levels listed below. So for a purchase and construction loan, active duty reserves and National Guardists and veterans who do not pay a down payment and are using their VA home loan for the first time will have to pay a 2.3% funding fee. Any use after that time would be a 3.6% funding fee. If they are providing a down payment of 5% or more, their funding fee will be 1.65%. If they are giving a down payment of 10% or more, then their funding fee will be 1.4%. For a cash out or regular refinancing loan, the first time use for the funding fee will be 2.3%. If the veteran's only prior use of entitlement was for a manufactured home loan, the higher subsequent use fee does not apply. Active service includes reserves and National Guard ordered to active service that meets the eligibility requirements for their era of service. Active service does not include active duty for training or active guard or reserve. So then the bottom table goes over the funding fee for other types of VA-backed loans. For a direct loan, the funding fee would be 1%. For an interest rate reduction refinance loan, it would be 0.5%. For loan assumption, that would be 0.5%. For a manufactured home loan, not permanently affixed, that is 1%. For a Native American direct loan, it's 1.25%. And for a vendee loan, it's 2.25%. Home inspections. So home inspections are not required by the VA. However, a home inspection is highly recommended for every borrower. We recommend that you choose an inspector that can give you an impartial assessment of the home's condition. The inspector should not have a conflict of interest in the sale. It is more important that you get the value for your investment and not just enter into another loan. A home inspection is a process where a home inspector observes and provides a written report of the systems and components of a property, including but not limited to heating system, cooling system, plumbing system, and the electrical system, structural components, foundation, roof masonry structure, exterior and interior components, or any other related residential building component recommended by the Home Inspection Council. What is the VA escape clause? The VA home loan escape clause is a mandatory clause included in all VA guaranteed home loan contracts to protect veterans or active duty service members from being forced to purchase a home that appraises for less than the agreed upon sale price. So the VA escape clause that's written in the contract will say something like this. It is expressly agreed that, notwithstanding any other provisions of this contract, the purchaser shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase of the property described herein if the contract purchase price or cost exceeds the reasonable value of the property established by the Department of Veteran Affairs. The purchaser shall, however, have the privilege and option of proceeding with the consummation of this contract without regard to the amount of the reasonable value established by the Department of Veteran Affairs. So this clause states that you have the option not to purchase a home when the appraisal's notice of value is below the sales contract price. If the property doesn't appraise, you will need to bring cash to closing for the difference between the appraised value and the sales price if unable to renegotiate with the seller. So for the VA appraisal, your lender will request a VA-approved appraiser after you and the seller have signed a purchase agreement. The appraisal provides an appraiser's opinion of the value of the home and whether it meets VA's minimum property requirements. It also assures you and your lender that the value of the property is based on facts and not just is based on facts and market data, not just the seller's opinion. It can help give you the confidence that the home you want to purchase is worth the investment you are making. So negotiating. You can negotiate the sale of the home up until the actual mortgage closing. Does the home price exceed the VA appraisal's reasonable home value? Does the home require repairs or upgrades? Whatever the reason, as a buyer, you can negotiate with your seller to find a middle ground that both parties can agree on. The closing date of your loan, earnest money, and funding fee payment. Any party can pay for your funding fee if you are not already exempt from paying it. This includes the seller and your lender. Your family could also pay with gift funds. For sellers' concessions, the VA allows sellers to pay closing costs, discount points, and any such concessions, and they can be up to 4% of the loan amount. Types of properties you can purchase with a VA home loan. You can buy a single family home, a townhome, or multifamily up to 4 units. You can buy a condo in a VA approved project, buy a home and improve it, buy a manufactured home and lot, build a new home, make changes or add new features to make the home more energy efficient. You can also reuse a VA loan benefit if selling or refinancing a home, assume a VA-backed home loan, which means that instead of opening a new mortgage loan, the buyer takes over the seller's loan. Closing costs. Who pays closing costs? You, the buyer, and the seller can negotiate who will pay closing costs like these. Remember, they can, if you're negotiating with the seller to pay these closing costs, they can pay up to 4% of the loan amount. So you can negotiate for them to pay commission and fees for your real estate, the loan origination fee, loan discount points or funds for temporary buy downs, credit report and any credit balances or judgments, the VA appraisal fee, hazard insurance and real estate taxes, state and local taxes, title insurance, and the recording fee. Can the seller pay for my closing costs? We allow home sellers or builders to offer credits to cover some of or all of the buyer's closing costs. You can find your home's reasonable value in the VA notice of value that your lender provided to you. Note, the seller's concessions are anything of value added to the transaction at no additional cost to the buyer. Concessions include credits for the VA funding fee, debt payoff, or prepayment of the buyer's hazard insurance. How much are closing costs? Closing costs vary based on factors like these: the loan amount, the property location, lender-specific fees, your VA funding fee status, or whether or not you'll be paying for your real estate professional. What are discount points? While most lenders offer VA home loan borrowers competitive rates, borrowers can also opt to pay for an even lower interest rate by paying for discount points. The seller, lender, or any other party can pay for discount points or other fees and charges on your behalf. Other VA loan options include the energy efficient mortgage, alteration and repair loan, construction loan, and the farm residence loan. Energy efficient mortgage. It is a loan to add energy efficiency improvements made in conjunction with a VA purchase loan or a refinance loan secured by that home. Alteration and repair loan. The VA understands that the aging housing stock in the United States has contributed to an increased demand for alteration and repair loans. You can use the VA home loan to purchase or cash out refinance homes that need alteration or repair. The VA can guarantee a loan for alteration and repair made in conjunction with a purchase loan on the property or cash out refinance of a residence you already own and occupy as a home. Construction loan. The VA home loan can be used to construct a new residence. You can use the construction loan to build a home on property that you already own or want to buy as part of the loan. Construction loans do not include newly developed properties where a builder is using their own funds for construction. You can still use the VA loan to purchase the property from the builder. You must find a participating VA lender which offers options for construction loans. Farm residence loan. You can use your VA home loan benefit to purchase, construct, repair, alter, or improve a farm residence that you intend to occupy. You can also use the loan to construct a farm residence on land you already own. The VA guaranteed loan cannot cover non-residential value of farmland in excess of the home site, or barn, silo, or other outbuildings necessary for farm operations, or farm equipment or livestock. So here's a little home buying timeline that goes from the start to finish of the process. So first you would meet with a buyer's agent or a real estate agent. Then you would want to shop around for different mortgage companies and get a pre-approved for a mortgage. And then with your realtor, you will go and visit homes. If you see one you like, you'll ask your realtor to write the offer for you. And that's when the negotiations start, after an accepted offer or before the accepted offer. After you have an accepted offer, you'll get your inspections done, request that any repairs be done that need to. The title work and appraisal will be done after that. And then you'll be looking to get your home insurance policy quote. After that, you'll set your date of closing. You'll walk through the home a final time and then go to your closing, and then home sweet home, you're all done. So here are a few resources that I have included. There is an organization called VA Housing Education. He puts out a lot of videos on YouTube that I feel are great. We're about to watch one of his videos shortly. I've also included the link to Credit Consumer Counseling. I've used them in the past. Personally, I have been trying to get my own VA home loan, so I've used them to help with budgeting, and they also do pre-purchase counseling as well. And then a lot of this information was taken off of the VA's website, the VA Home Loan Buyer's Guide, which goes over everything, is the last link there. And then here is the video that we will be watching.
So without further ado, let's go into it. Now, today's format is going to be a little bit different. We're going to do a PowerPoint so you guys have all the information, because there's just a lot of stuff to go through. So the first key part to this is that you have both eligibility and qualification for a VA loan. You have to have both in order to use it. Today's focus is going to be eligibility. So eligibility is, do you meet the time, you meet the criteria for length of service and character of discharge to use your VA home loan. And we're going to break all of that down as well in the presentation. And the entitlement amount is the amount that you have to use your VA home loan. Separately, coming up, we're going to do a video on how to read your certificate of eligibility and break that down. And a couple of key notes is the VA loan does not pass down to your children, but it can pass down to a spouse if they meet certain criteria, which we're going to go over as well. Now, the thing is, if you are a delinquent on federal debt, you could disqualify yourself from the VA home loan. A good example would that be is that if you are delinquent on student loans, back pay, even if it was like you're in the military, supply, that can cause it. And another piece to that is that if you do take out like an SBA loan, that can also affect your qualification. Lenders pull what's called a caregivers report, and I also did a video on that not too long ago. But the key to all this, even the VA says it, is don't disqualify yourself from the VA home loan. Reach out to the regional loan center, because things are always changing, and this will kind of give you a good overview of that qualification. And plus, this is good to pass down to other soldiers or veterans or, you know, surviving spouses, because a lot of times, like I said, they don't even know they can do what they can do with the VA loan in general. Now, the qualification piece, right? You need to meet the credit income standards in order to qualify for a VA loan, right? That's the second part. And that's why you guys should just check out the channel, because a lot of that information is what we're always talking about. So let's talk about the basic eligibility requirements. If you are on active duty, currently serving 90 or more days during wartime, you're already eligible for the VA loan, and 181 days during peacetime. So you join the military 6 months later, you could already use the VA loan. We really don't see too many people using the VA loan that early on in the process, but you know, you might be maybe becoming a little bit older, you may be more established, depending on your rank and how much money you're getting. yeah, obviously you can use the VA loan, so it's pretty cool. If you're a veteran discharged under conditions other than dishonorable, should I say, then you can use the VA home loan. For veterans that have already served and are out, you need 24 months of active duty time, or a full period of which called or ordered to active duty, but not less than 90 days on during wartime, and 181 on peacetime. And the other piece to this is if you had a medical discharge, even if you served for 1 day, you would still be able to get your benefits. Now, this is kind of like an odd one that I've seen now a couple times, thanks to viewers reaching out, where if somebody may have, for example, 100% permanent and total disability rating, but they don't qualify for the VA home loan. So I had recently somebody, came, or I talked with them on one of our live events. They scheduled a call afterwards, because I do actually do all the calls. So again, if you guys schedule a call, you're going to be talking with me. The key to that is that they discharged them under something else and not a medical discharge. So you do need to get a medical discharge. And I'll also be doing a video on how to do upgrades to your DD-214 for your service discharge coming up here in the next week or two. So let's talk about some of the additional requirements. Now, if you served in the Army, Navy, Air Force, Marine Corps, Coast Guard after September 15th, 1940, but before September 7th, 1980, right, enlisted, and officers have a little bit of a different time frame, then again, it's 90 days or more, as part of which occurred during wartime, or 181 consecutive days. Now, this kind of breaks down the time periods that you have needed to serve during that time, and you'll see sometimes the time periods would be shorter than, like, let's say, the 2-year requirement that you have post this, which we just talked about a little bit ago. So that's why you really need to understand, where do you fall into this criteria, and if you do need help getting your DD-214, definitely reach out to the National Archive to be able to get that. But they've also been revamping some of the stuff here. So again, we're going to be doing a video. And all of this stuff is in the VA handbook. So just double check the times that you've served. And if you have parents that serve, this is a great way to help them out. Make sure they get all their benefits that they deserve. Now, the other part for Reserve and National Guard. So this is going to be a little bit different. So now, one thing to remember is that if you serve the active duty and you meet the criteria or ready to use the VA loan, you're good to go. That supersedes it. So, I'm not sure if you got a medical discharge, how that would work, you joining the Guard from that. But if you got out, did the minimum of the 2 years, you're eligible for your VA loan. You could already use it off the bat. Otherwise, it's going to be 6 years in an active or drilling status, unless, again, this discharge for service-connected disability. You must have an honorable character of discharge. Now, this is different than active duty, where you can have other, a general and a honorable. You're good to go. In the National Guard, you do need to have an honorable discharge for that. Another key piece to that 6 years that a lot of, what happens often, more than it should actually. That doesn't happen like all the time, but it definitely comes up. Is that, like, let's say you did the full 6 years, but you missed an AT, but you never made up for it. So now you don't have enough points to qualify for the VA loan. And then so I joke around, but I'm like, you might as well go back, join, so you can go back for a year just so you can get all your benefits. Because I think it's worth it. But sometimes people wait much later in life to kind of see what benefits they have. And that's kind of where it can bite you in the butt. And we talked about active duty. Now, there was a VA Circular 262108 that came out in 2021, which was expanded home loan eligibility based on certain National Guard service. This definitely opened it up, and I did a whole video dedicated to this. If you're full-time, this is when you get called to full-time National Guard duty, including training and other duty. This does not include inactive duties such as like drill months, basic training, or initial training. Typically, any type of training is not going to be included. Now, this is also under Title 32 orders, which is unique, right? Now, this is 316, 502, 503, 504, 505. Easy way to determine this is pull up your NGB orders and take a look at what you fall in under that category. Now, the key, actually, I'll go over that in a second. So no less than 90 cumulative days in full-time National Guard duty, of which at least 30 of those days must be consecutive. So a lot of people, like back during COVID, did the riot, COVID stuff, all of that typically would qualify you for that. And the cool part about this is it's retroactive. So even if you served a while ago, you still be able to qualify. Now, this is the thing with these that I was going to mention, is that we've done a couple of them, and a lot of times veterans will come to us, they've said, like, I've been denied by 5 or 6 lenders. Like, this is no joke. And that's because they are not submitting the correct paperwork. So when you're running into an issue with your certificate of eligibility, and a lender's helping you out, like, we can do it. You can schedule a call. We'll pull your COE and give it to you. It's super. It takes like literally 5 seconds. But when they don't come back automatically, it just causes some issues. And in general, right, when you're trying to determine your eligibility, the end goal is to get that certificate of eligibility, because that's what actually allows you to execute half of the loan, right? Because you still qualify, but at least you know you can use that VA home loan. And if a lender doesn't pull it early enough, and you don't get all this documentation early enough, you could jeopardize your home buying process, right? It could be delays, and trust me, sometimes to get a copy of DD-214, because the VA may require it, not in all cases, it could be up to 6 months to get it. So again, it could have a big impact on your transaction and your overall piece to it. But this is why getting those orders and then having your chain of command also be able to write these up is so critical, especially for National Guard members. Now, for surviving spouses, some spouses may qualify to use the VA home loan. Now, a couple criteria as usual. So I'm going to kind of read through these. This is also in the VA handbook. And again, still call the VA to be able to get it connected with them. I'll drop a link down below so you guys can go to the va.gov website and kind of see that. So typically it's gonna be unmarried surviving spouses of a veteran who died as a result of service-connected causes. This is why it's also very important to, if you're a veteran, to if you don't delay getting VA disability, I think it's I just think, like, if there's something with you, maybe see a doctor, see if they can connect it, at least to get some type of rating, because then you have all those additional benefits of having VA disability that you can transfer on to your spouse and children. But again, the VA home loan is a pretty phenomenal one, and we've helped a lot of surviving spouses use the VA home loan because the veteran did what they could in order to secure that transfer. The other part is surviving spouse of a veteran who dies on active duty or from service-connected causes, or who remarries on or after age 57 or on after December 16, 2013, and spouse of an active duty member who is listed MIA or POW for at least 90 days and limited to one-time use only. So that's the only time where you're going to have really a one-time use, because with the VA loan, because we do a lot of education around this, obviously, it's unlimited benefit. You can unuse it unlimited times, but in this specific case, there may be some people out there that still are able to qualify for this, especially from like Vietnam War. All right, surviving spouse veterans who died from a non-service connected causes may also be eligible in certain cases. This is why, again, you want to reach out to the VA. And if you're filing for the first time, you need to complete a VA Form 26-1817. I'm going to drop that link down below for you guys. So you can, for the video that I did just covering all surviving spouses, because there's a lot of things to the benefit. As usual, do not disqualify yourself. Reach out. We're happy to walk you through it. And we just need to keep passing this information on and educating other veterans and military families around the VA home loan benefits, because it is such a powerful tool to utilize.
Should you guys have any other questions, you can reach me at 815-334-4229, and that is also my email address there.